that count?
There's only one person he has to accommodate, as we all know.
Who, the market?
No, it's an audience of one. I will accommodate you, just not in the June statement.
But did he do enough to well, he's going to keep his job either way, he thinks, but do you think he's going to get another barrage of attacks on the president? Does it matter?
Dude, the president could tweet his home phone number in an hour. Like, anything can happen. So I don't play that game. I don't think I have an edge on that.
But do you think that it's a worry for the markets potentially if
Apparently not.
the president acts
we have
more
not
aggressively?
We have not cared in probably 2 years.
Michelle Girard, how did Fed Chair Powell today change the outlook for rates?
Well, he clearly suggested that the Fed is much closer to cutting rates than I had thought. You know, we had expected that we'd see lower rates by September. It looked like it was a pretty close call today, quite honestly, whether or not to act. In the end, they decided they'd wait for more information. But we now expect that the most likely outcome will be a rate cut in July. You know, to me, it seems that it's just a matter of if not, or rather when, not if the Fed believes that rate cuts are now warranted.
Jill, you like financials, which suffered, not huge moves, but suffered off the back of today's Fed meeting. Have you changed your view on that, or is this a buying opportunity?
So we are overweight financials. I think there's a lot of opportunity right now in some of the more, beaten down cyclical sectors. And if we do get a deal on trade, and assuming that the economy does not deteriorate further, then a lot of these areas that are more cyclical and areas that are more sensitive to trade, industrials, are trading at, pretty depressed valuations. Financials is a more cyclical area, but it's also less sensitive to trade. So financials is one of our preferred overweight sectors right now because of that, less trade sensitive tilt. We haven't found financials as sensitive to the yield curve as some might suspect. So there was, when the 10-year, 3-month yield curve is inverted, we found that financials has actually outperformed following that. And I think our call on financials, when you think about it, is less hinged on the rates outlook and more hinged on some of the other factors that we think could be big drivers, like cash return. You're really seeing big buybacks, big dividends being initiated and grown within this sector. Regulatory risk is obviously a lot less than it was, relative to last cycle. And leverage in the sector. This is now one of the least leveraged sectors within the S&P compared to where we were 10 years ago. So from a quality standpoint, we like financials.